Ben Tan, welcome to the channel. It's great to have you on.
Thank you so much, Jack, for inviting me to this.
Yeah, it's great. I mean, I've really been liking your content on Twitter, and I thought I had to have you on. So you talk about value investing. I guess why don't we start there? So what is value investing for someone who's never heard of that?
Yeah, for sure. Okay, the whole concept is going to be really wordy, but I'll try to simplify it. So the whole idea is to really value a company based on its intrinsic value. There's a lot of methods on valuation. Personally, I prefer discounted cash flow, where I kind of project their free cash flow, apply a discounted rate, estimate their growth in terms of the next 5 years, the next 10 years, and derive this value, right? And then with this value, I compare it with the actual price that they are trading on the stock market. Now, the whole idea is to actually buy stocks or invest in companies that's below what they are trading in the stock market. Simple as that. But the thing is that for my case, I am very conservative. I don't just buy companies that are undervalued or cheap companies. I will actually apply another layer of methodology, which is to really take a look at the economy mode. Like what Warren Buffett actually mentioned, we really want to buy or invest companies with a sustainable competitive advantage. So not only just valuating, right, looking at the prices, looking at the fair value, looking at the stock price. I also want to invest in good companies, great companies that has a sustainable competitive advantage.
Okay. So I guess one thing that I hear talked about a lot on particular like these high value tech stocks where it's kind of predicated on growth. Are you using any sorts of things to project growth into the future for more tech like stocks?
Yeah. So there are three sources where I actually rely on such growth rates. First is some of the banks they actually offer such report, their analyst report, and I actually read it from there or take the figure from there. Another two sources that I actually rely on, one is definitely the company itself. Sometimes you can actually take a look at the CEO letter or shareholder letters, or in fact their annual report. They will kind of give a little bit of a projection. What are their initiatives, their company strategy, how is it going to evolve in the next 3 to 5 years. So you can kind of derive that growth rate from there. And lastly, I actually use online resources. Morningstar is one of the good ones, whereby they have actually pull up their their projected growth rate, in a very detailed way, in sense of they actually estimate the gross margin, the net margin, all the way to the EPS level. So I thought combining all three sources, not only just relying on one, which is very important, give me the kind of estimation on the growth of the company.
Okay, so you mentioned Morningstar. Are there any other tools you like to use when evaluating companies, Yahoo Finance, anything like that? Or certain books that you might recommend if someone's just starting out where they can, learn to use the tools available?
Yeah. So I think I will just answer this question into two parts. First, regarding the tools, online tools, right? So Morningstar is one of my favorite. But the thing is that you have to pay for it. It's not free. Another one is called Guru Focus. I think they have lovely stats, lovely figures. They can actually get all your numbers out from there. The third one is Simply Wall Street, right? Again, these are all paid site. They are not free. I think if let's say you are serious about investing, it's good that you actually pay that at least that basic subscription plan. And of course, the last one, I think everyone's favorite, is definitely Yahoo Finance. You can't miss that out. On books, I love reading books, and there's just a lot of books that I can actually recommend. And because of this, I don't really know how to start. But for beginner, to get you guys very excited about the whole concept of investing, I thought One Up on Wall Street by Peter Lynch should be very good. He kind of break down the whole concept of investing versus trading pretty well. For example, as an investor, you really want to wear the hat as a business owner. You actually own businesses. You actually have an ownership in the company itself. It's not really just a paper or lottery, whereby you buy today at $10 and you pray and hope that in 3 months' time it go up to $30 and then you sell. Investing is not like that, right? So I thought that book is pretty interesting. And previously, when I talk about economic mode, I think this book by Pat Dorsey, The 5 Rules of Successful Investing, the guy behind Morningstar as well, he break the concept of economic mode very well. He talks all the sources of economic mode, like intangible assets, network effect, barrier to entry, and cost advantage. And he even touched on, different industries have different kind of mode. So, if let's say, you are interested to get to know more about this whole competitive advantage, this whole Warren Buffett term called economic mode, that is the book that you can actually read.
If you're comfortable, would you mind sharing how you're allocated? Like what sectors are you in right now, or what sectors maybe are on your radar going forward?
Yeah, happy to share in terms of that very high level view. So I'm 50%, which is almost half of it, allocated to I actually consider this group of stocks as technology stocks, IT stocks, as well as communication service. I mean, if you take a look at Meta, they are actually classified as communication service. If you take a look at Alphabet, they're actually classified as communication service. They are not classified under technology, right? So I just group all of them together and classify them as technology, IT, or communication service. So more than, I would say 50%, around 50%, they are allocated to this group of I would say this particular industry. The rest, I would say the next biggest one, surprisingly, I do allocate about 20 to 25% to ETFs, right? And these ETF, they actually track the S&P 500 as well as some of the thematic ETFs. I'm someone who, okay, this is a bit sidetrack a bit, but I'm someone who believes in metaverse. So there's a couple of good metaverse ETF out there that actually invest in it as well. And the remaining of the portfolio, I spread out evenly to healthcare, REITs, real estate investment trusts, financials, as well as consumer staples.
Awesome. Now, when you say like the S&P 500 ETF, is that the SPY? Is that specifically what you're talking about? Okay.
Right, SPY.
Cool. So for the listeners, once again, this is Ben Tan. You can find him on Twitter at invest with TGI. I think for the second half, some of our listeners have become somewhat interested in living abroad and personal finance through a more global lens. So I think I'd like to ask you some questions about budgeting in Singapore. How do your expenses look? And I guess I'll just stop there and see where you take it, and then we'll dig in a little deeper.
Sure, for sure. Well, as most of you are aware, Singapore is one of the highest cost of living, second to New York, if I'm not wrong, or on par. And to me, it really depends on your lifestyle, right? If let's say you are living that high societal kind of lifestyle, then of course your expenses is going to be a lot. But if let's say you budget it well, you plan carefully, in fact, you can actually live through it, right? You see, there's a huge I would say there's a huge extreme. There's a huge extreme between in terms of food expenses. We have this kind of, I would say, coffee shop, right? In our lingo, it's called kopitiam, whereby you can actually, get your lunch, your dinner at around, I would say, $7 Sing, which is about 5 to 6 USD, right? So and it's filling, right? And it's filling. So I thought, if you budget yourself, you don't eat really too expensive food, you eat in such coffee shop area, you can actually save a lot of money. Now, I would say that one of the biggest, or I would say the most expensive items that usually shock foreigners will be our alcohol. The alcohol tax here, or they classify it as a sin tax, SIN, whereby you commit a sin, the sin tax, like your cigarettes or alcohol. The government actually tax a lot. So I would say 1 pint of a normal lager beer here in Singapore will easily set you around 15 USD. So it's pretty steep, right? And if let's say you're talking about opening a bottle of wine or a bottle of whiskey, yeah, that's gonna be really expensive. Now, in terms of transportation, which is one of the biggest expenses, right? The public transport here is really, really well connected. You can get from point A to point B within an hour, fast, efficient, smooth, without any complexity. You don't have to kind of like navigate through the maze of a subway network. Taxi here, the cabs here are, I think, affordable. But what's not affordable in Singapore is actually owning a car. All right, so it's a pretty cool concept here. Now, before you actually own a car here in Singapore, you have to buy this certificate called the Certificate of Entitlement, or COE. Now, the whole concept between this Certificate of Entitlement, or COE, is to really, really restrict the number of cars out there. So that's why there's practically no traffic except for peak hours, right? So the traffic here, the highways here, the roads here are pretty smooth because the government is smart enough to limit the number of cars by introducing this COE. And this certificate is actually up for auction on a monthly basis. So probably can you guess how much one certificate actually costs for a normal car?
So is this a one-time fee, or do you?
Yeah, it's just a one-time fee to
One
own
time?
that. Yeah.
By the way you're phrasing it, I'm guessing it's higher than I'd like to think. I'm gonna say 10,000 USD.
Nope, higher.
Oh, 20? 20,000?
Nope, higher.
Oh my God. 100,000.
It's probably 70 USD.
Oh my God.
70K USD. Now, listen, Jack, you're just getting that certificate only, all right? You have not actually purchased the car. You actually get
Right.
that certificate for you to purchase the car. So on top of the cost price of the car, you're paying that 70K plus to the government. So that's why, owning a car here is really expensive. It's good and bad, right? The good thing is they really restrict the traffic here, which is good. The pollution as well. But the bad thing is, for a family whereby they have a lot of kids, well, owning a car is tough, man.
Wow. That is crazy. I would almost imagine, because it's so hard to purchase a car and there'd be less cars on the road, maybe that insurance might be less than what I would typically think, but I don't know. Do you know anything about now? I'm guessing you do not have a car.
No, I don't own a
Uh-huh.
car. It's too expensive to own a car. But the thing
Yes.
is that I work from the comfort of my home.
Mhm.
So I don't really see a need to actually own a car.
Okay.
For auto insurance, right, it's pretty reasonable. They don't really charge you that high. I mean, auto insurance, life insurance, your personal insurance, hospital insurance, I would say they are very competitive. So it's not that extreme whereby we think it's crazy. It's just that the idea, the whole concept of owning a car is just crazy, crazy here.
Wow. That is very eye-opening, to say the least. I think another thing that Americans in particular are interested in is healthcare abroad. How do you guys pay for healthcare coverage?
Yeah, in fact, I'm very curious about the American healthcare as well, because there's a bit of a debate recently in terms of different political party. And I myself actually do invest one of the largest healthcare company, UNH. So that's why with this whole changing policies, it caught me, keeping the toe as well. But I will ask that later on regards to the American healthcare. But for Singapore healthcare, um, in terms of the quality of the healthcare, all right, it's one of the best, I would say. I would say that most of the stuff, most of the healthcare technology services, the medications, the treatment, the surgery, we actually learn, mainly from the United States yourself. We also adopt a lot of technology procedures from the United States as well. So I would say that Singapore has one of the best healthcare in this region. But price and cost comes with the quality as well. We actually have this very basic insurance plan, right? We call it the MediShield plan, right? And it actually covers Singapore citizens in terms of hospitalization for government hospitals. I won't go into the detail of government hospital versus private hospital, but obviously there's a huge difference in terms of quality, waiting time, and treatment between the government hospital and a privately owned hospital, right? So at least the bare minimum, the basic, right? All Singaporeans are covered with this insurance, and if let's say they will need to seek treatment, they need to do a little, they need to do surgery, or cancer treatment, stuff like this, they can actually use this insurance, or I would say they can visit a government hospital and use this insurance. But there's a caveat. This insurance don't cover you 100%, right? You still have to fork out yourself. If not, there will be an abuse to this whole system, right? Everyone just, after all, it's covered. So there's a caveat, right? And that is that for us, we have to actually pay a certain percentage to it. It really depends on your age as well as how much pension savings that you have. So I can't really give you that fixed amount. Now, besides that, right, there are also insurance company like AIA, Prudential, Manulife, Great Eastern that sells healthcare insurance or hospital insurance plans. They cover more comprehensively. They cover your private hospital bills, right? So if let's say, most of Singaporeans, with the extra spare cash, it's always good to get that sort of insurance because it kind of cover you the entirety. Of course, again, it can't cover you 100%. You still have to pay that 5% to 10%. Really depends on your age, the kind of plans that you purchase for your whole deductible. I think that's a good idea as well because we don't want, where we create a system where the citizens or people actually abuse the insurance program.
Do the employers is your employment ever the source of your healthcare coverage, or do most people go either, well, I guess use the socialized healthcare coverage, or do they have to, even if they have a job, if they wanted the private, would they have to actively seek it out and get underwriting, or is it through the employer?
Yeah, for the employer, they actually provide very, very basic medical coverage, right? Those that actually cover you for general outpatient, pharmacies, a little bit of your vision, dental. But they don't cover major illnesses, right? For example, if someone somehow diagnosed with a stage 1, stage 2 cancer or a bit of a heart disease or whatsoever, major illnesses, employers don't really cover that, right? They only cover the basic one. So most of them actually have to seek out for those private insurers to actually get themselves insured, and they do have to pay a fee for it.
So on top of, okay, so the car expenses were a big shocker to me. Are there any other things that you could think that might really surprise an American? Like for instance, I heard you guys can't chew gum. Is that true?
Sorry, come again.
I heard you guys are not allowed to chewing gum. Is that true?
Yeah, it's true. You actually get a fine of 100, almost 100 USD to chew gum. And that's the reason why Singapore has this infamous title called the Fine City, FINE. Because whatever you do, you get a fine, right? You jaywalk, you get a fine. You speed, you get a fine. You chew gum, you get a fine. You litter, you throw rubbish, you get a fine. So that's why it's a fine city. But yeah, we don't chew gum. You can't. Nobody buy gum or sell gum here in Singapore.
Is there any, does anyone even smoke cigarettes anymore? Or is there a sin tax on that as well?
Yeah, yeah. Yes, we do. I mean, people smoke cigarettes. Vaping is illegal here, right?
Okay.
So you can get fined again if let's say you get caught vaping. But a pack of cigarettes is really expensive. I don't smoke, so I do not know how much it is. But I know that based on my friends who smoke, they are really trying to cut down their nicotine intake because cigarettes are getting more and more expensive, all because of this syntax.
Gotcha. Okay. Well, this is, yeah, been very eye-opening. I guess if we could bring it back to the personal finance, and
Yeah.
we'll slowly wrap it up. But if you could, I like asking everyone that comes on the best and worst money advice that you've either received or heard.
I receive a lot. I mean, I'm pretty fortunate to actually receive or at least read, hear, listen, a lot of good advice about money. For bad one, not so much, but rather I actually experience it myself, right? So that's why I learn from it, right, and start to pivot it out. So let's talk about the pleasant one first, the good stuff. If let's say you can spare a bit of cash, right, after paying your bills, get through your expenses, try to learn how to invest. Really try to learn how to make money work for you, right? Investing can sound really complicated. Investing can sound very complex, but if you take time, block out probably 1 month, or I'm not trying to scare you, but probably the 4 weekends of that month, right, to learn investing, right? I think you can actually get a good hold of it, right? This whole subject is actually made very complex by your news, your media, your reporters, people who work in Wall Street and stuff like that. They try to use all terms, all kind of bombastic terms, jargons, just to really confuse you. But ultimately, as investors, you're just a businessman, right? Stock market is just one marketplace whereby you can actually buy tons and tons of businesses out there, right? So as a businessman, right, find that business that is right for you, right? Find that business that you are familiar with. Don't find those very fanciful business that you don't even understand. Shit, sorry.
Okay.
And invest it, right? Understand their fair value and try to invest below what they're trading, right? So view stock market as a marketplace of businesses and view yourself as a businessman. Don't be afraid, right? Step out from the comfort zone. But I always tell my peers, my friends that before you invest, it is always good to have your emergency funds established, right? At least it really depends on your lifestyle, right? For me, I have at least 6 months of emergency funds already put aside, and I cannot emphasize how much important this fund is, because if things happen and stuff happen in life. Especially when we witness the past 6 months where there's a massive layoff, right? You don't want to sell off your investment at the wrong time, right? Because when life goes downhill, you'll be in panic, you'll be desperate, and the last thing is to sell your investment at the wrong time at the wrong price. So always park your emergency fund aside before you invest.
Awesome advice. What
Now,
about for a bad piece of advice that you've heard?
Yeah. For the bad piece of advice, I would say it all goes back to about 15 years ago when I first started out investing. I do not have that whole grasp of investing as a concept, right? And it's always the reason why I create such platform to actually educate people. Now, I actually attend those seminars from those brokerage. All right, those brokerage usually offer such free seminars for their clients. So I attended once, and they actually kind of sell you the idea of trading as investing. Now, and fast forward 10 years later to today, I realized that, they do have an objective of selling you that as an idea because ultimately they actually earn through fees, transaction fees, or, whatever fees they whenever you buy or sell your stocks, right? So back then, I got really messed up and confused with the whole idea of trading versus investing. And I take investing as trading, which is very bad, right? So I remember one of the very first stock that I actually invest is a local bank called DBS. It's one of the bank here in Singapore, fundamentally quite strong. But back then I don't really care about fundamentals and economic mode or whatsoever. The whole idea is to trade, right? And I did that, with what? I did that with margin some more. So you are actually borrowing money from the brokerage to trade, right? And margin actually offers a very high interest rate, right? What's worse if let's say it goes below a certain amount, right? You get a margin call and you desperately need to kind of like fork out cash or money to top up into your account. And that is what actually happened. I actually borrow money through margin through that account and invest in DBS. Trade in DBS, sorry. And within the next I think 1 or 2 weeks, right, I was very humbled by the market. The stock went down, right, and I got my margin call. The very fortunate thing is that I do not have to pay a lot, or I do not have to really top up a lot to actually maintain that margin account. So with that, I learned my painful lesson. And to be honest, back then I wasn't earning too much. Investing, putting such an amount of money really burns me. So it's one of the most unforgettable lesson, but it's good. It's a good lesson. Um, yeah, I think one of the key takeaway here is that never be greedy, right? Although there's a lot of brokerage out there that offers you margins, or even banks out there to offer you loan at a very low interest rate, don't be tempted. Never, ever, 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 ever borrow money to invest. It's just the stupidest idea ever. Now, the thing is, don't get me wrong, right? I mean, if let's say you are a math guru and you really know how to calculate the interest to that percentage point, and you know how to, play this whole arbitrage game and leverage this whole system, then go ahead, right? But for me, I like to keep it simple. I like to sleep peacefully at night. I don't borrow money to invest.
Awesome. Awesome advice, Ben. So as we're closing out, I've loved talking to you. I'm sure the listeners have gotten a lot of value from this. Why don't you tell people where they can go to find out more about you or get in touch with you?
Yeah, for sure. So my Twitter handle is invest with TGI. TGI actually stands for the Globetrotting Investor, which is actually happens to be my Instagram account as well. The reason why I actually created this was back, I think exactly 1 year ago, when the borders finally opened. And as you know, Singapore is a really small country. I finally get to travel out of Singapore. Yeah. And I can't really think of a nice Instagram handle. So I just, created this, the Globetrotting Investor, and I somehow stick to it. So yeah, you can find me on Instagram, the Globetrotting Investor, Facebook, or even on Twitter, Invest with TGI. Yeah, that's where you can actually find me. I do have a website as well, www.theglobetrottinginvestor.com as well. I mean, if let's say you and your audience are really interested to know more about the fundamental analysis of the US companies, I actually do all the fundamentals analysis up on my page. Feel free to go and take a look.
Awesome. Thanks so much. Well, we'll have links to all those in the YouTube comments in the show notes. So Ben, thanks so much for coming on, and hope to talk to you soon.
Thank you so much, Jack, for inviting me to this. It's a privilege.